2025. I am Luna.
I am JP Morgan.
It highlights a pretty noticeable tech tumble. Nasdaq slid, 1.3%?
And the S&P 500 down about 0.6%. The briefing suggests a rotation out of tech into safer bets like energy and healthcare.
That seems to be the story. And it wasn't just broad rotation. There was specific news, too, like Target plunging around 8%. That was a surprise CEO change.
Why, 8%?
Yeah. And chipmakers like Intel and Micron took a hit, too, down about 6% on reports about potential government intervention. So investors seem a bit jittery.
Okay, so that nervousness, does that connect to the bond market picture? The briefing mentions elevated treasury yields and a deeply inverted yield curve. What's that telling us?
Good question. So deeply inverted means short-term yields like the 1 year around 3.9% are, well, significantly higher than long-term ones, like the 10-year near 4.3%.
Which is unusual, right?
Very. It's often seen as a recessionary signal, or at least worries about future growth. And the Fed's July minutes, also mentioned here, didn't exactly soothe nerves.
The FOMC minutes. What was the key takeaway there?
Well, most policymakers seem to favor holding rates steady for now, so it kind of reinforced that wait-and-see approach.
Meaning hopes for a quick Fed pivot, cutting rates soon, got pushed back a bit.
Pretty much. That keeps borrowing costs higher, supports the dollar, which the briefing notes held near a one-week high, but it puts pressure on stocks and, yeah, even crypto.
All right, and quickly on commodities, oil prices were up.
Yeah, second day running. The briefing points to that huge drop in U.S. crude inventories. 6 million barrels. Way more than expected.
Okay, so strong demand signal, but maybe adds to inflation worries down the line.
That's the risk. Gold, on the other hand, was near a 3-week low. Stronger dollar, rate staying higher. Not great for gold usually.
Got it. Okay, let's shift to some key data releases mentioned. That U.S. oil inventory number was clearly significant. What else stood out? Like Europe's inflation.
Yes. The European inflation story is quite interesting, a real divergence. The euro area inflation actually held steady right at the ECB's 2.0% target.
Okay, so that gives the ECB maybe some breathing room.
Exactly. But contrast that with the UK, their inflation ticked up to 3.8%, higher than forecasts. That complicates things for the Bank of England, especially after they recently cut rates.
So lingering price pressures hitting different places differently. What about India? The briefing mentioned their core industries output.
Yeah, mixed signals there. Construction looks strong, cement up almost 12%, steel nearly 13%. But energy output was down, coal quite sharply, crude oil down a bit too.
Okay, now moving beyond the pure data, the briefing flags some bigger macro events. China's social insurance crackdown, for instance. What's the impact there?
That could be quite significant, yeah. The ruling basically says firms have to pay mandatory social insurance. Apparently, compliance is low now, like only 28%.
So this means higher labor costs for a lot of businesses.
Absolutely. It could squeeze profits, maybe even dampen economic activity a bit in the short term. Definitely something to watch.
And on a more positive note, the U.S.-EU trade deal. Lagarde confirmed it.
Yes, confirmed as largely in line with expectations, about a 15% average tariff. The key thing is it avoids a feared trade war, reduces uncertainty. Good for market sentiment, especially in Europe.
Right. And there were geopolitical points, too. Russia and India's oil ties.
Still very strong. Russia expects India to keep buying large volumes. It's now, 35% of India's oil imports, up from almost nothing pre-war.
Shows those shifting alliances, driven by discounts, obviously, but potentially strains India's relationship with the U.S.
That's the dynamic. And the briefing also notes Israel's push on the E1 settlement plan in the West Bank. About 3,400 new housing units.
That's controversial, isn't it?
Highly. It boosts Israeli construction, sure, but draws international condemnation and definitely ramps up regional tensions.
Okay, so lots of moving parts. Finally, looking ahead, what does the briefing flag as the key things you should watch in the next 24 hours?
The big one, no question, is Fed Chair Powell's speech at Jackson Hole. That's Friday, 10 a.m. Eastern.
Always a market mover. What are expectations like?
Well, markets are pricing in a pretty high chance, like 85% of a rate cut in September. Powell's tone on inflation on the job market, that could completely reset expectations. Huge potential for volatility.
Right. We've seen Jackson Hole speeches move markets significantly before. Anything else immediate?
Yeah, tomorrow morning, Thursday, 8:30 a.m. Eastern, we get U.S. initial jobless claims. Forecast is around 227,000. If it comes in lower, that suggests a strong labor market.
Which might make the Fed less eager to cut rates.
Precisely.
Yeah.
And at the same time, we get the Philly Fed Manufacturing Index, expected around plus 7.0. gives us a read on factory activity in that region.
Okay, so a really packed 24 hours coming up, building on what this briefing already covered.
Yeah.
Tech wobbles, oil surges, Fed minutes, those European inflation contrasts.
And the bigger picture stuff too, China's policy shifts, the Russia-India energy connection, all leading into Powell's speech tomorrow.
So wrapping this up for you, what's the key takeaway from digging into this briefing? It really drives home how interlinked everything is, doesn't it?
It really does. Policy, data, geopolitics, it all feeds into this complex, constantly shifting investment picture you need to navigate.
It makes you think.
Yeah, it raises a bigger question, perhaps. As you see players like China, Russia, India deepening economic ties outside those traditional Western routes, how might that fundamentally reshape supply chains and trade, for decades? Way beyond just the daily market noise this briefing captures, something to keep pondering.
You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai, know what moves your money.